So as a player in the crypto space and as a 20-plus year veteran of investing, to me it tells me that the bear market is probably not over. When bear markets finally conclude, people are broken. And anyone who was living through the dot-coms or the 2009 financial crisis, you remember this. I mean, when we got to those lows in the financial crisis, at that point, people didn't even open up their portfolios. They didn't want to look. They didn't even want to talk about anything anymore. It was like their hopes and dreams had been dashed. And in crypto, that has not happened. And that's a concern to me in terms of telling me that there's still potentially more downside in crypto.
Welcome to this video featuring Gareth Soloway, renowned expert in the field. In this presentation, Gareth provides his expert analysis of the current state of the crypto market and its relation to BlackRock's application for a spot ETF. He shares his valuable perspective on the likelihood of the SEC granting approval and the potential impact on Bitcoin's price. Gareth delves into the emotional dynamics that drive the crypto market, highlighting the implications of various ETF options. Additionally, he examines the bottoming of Bitcoin, drawing parallels with historical market trends. Gareth also discusses the potential breakout in the gold market and the role of physical gold in a society increasingly dependent on AI and tracking. Prepare for valuable insights and expert commentary from Gareth Soloway.
Higher, I would just be very cautious once it gets released to see if that marks a short-term high.
Gareth, it's because we were on, you hosted a great Twitter space last week, and I bring it up because you had so many great points. That's why everyone should tune in to Gareth's Twitter spaces. So basically, you were saying it's not necessarily a game changer because everyone thinks, okay, BlackRock ETF, that's going to just blow up the price. But on the space, you were saying not necessarily.
Yeah, I think again, people buy the rumors and the excitement, and the crypto market is driven by emotion. 99% of it is emotion driven. And I think that people, again, get overexcited about these things. And then when they really are out there, you just say, okay, well, there's gold ETFs, there's this ETFs, there's all these ETFs, and there's still the futures ETF, right? I mean, it's not like you can't play the BITO or the BITI ETF, which is long short Bitcoin. So again, there's options out there. Yes, it's a little bit better than the futures ETF because you don't have the losing value factor of the flip over of contracts, but it's not really a game changer to me overall. So as a player in the crypto space and as a 20-plus year veteran of investing, to me it tells me that the bear market is probably not over. And I'll tell you why, is that when bear markets finally conclude, people are broken. The bulls just, they can't even muster bullishness anymore. And anyone who was living through the dot-coms or the 2009 financial crisis, you remember this. I mean, when we got to those lows in the financial crisis, at that point, people didn't even open up their portfolios. They didn't want to look. They didn't even want to talk about anything anymore. It was like their hopes and dreams had been dashed. And in crypto, that has not happened. And that's a concern to me in terms of telling me that there's still potentially more downside in crypto.
Okay, good segue. Let's talk gold price, which has been, can I say, boring these past few weeks, Gareth?
It has been boring, but this is the kicker. So when we were hitting a triple top high here, I talked about needing a pullback. And this is the way charts work. So some quick education. So here was your high going back to 2020. Yep. This was your double top. Markets and technical charts pull back big time. So there's big pullbacks on double tops, and that's what we saw here, right? So if I put a trend line or an arrow, this was a big pullback. Triple tops are shallow pullbacks before usual breakouts. So notice this retrace. If you connect this high to this secondary high, we broke out, we retraced and held support. My guess is you are now starting the next leg up, and this next leg up should actually be the breakout leg, probably in the next few months, out above the recent, triple top all-time highs on gold. If you look at what is really a physical, like if Fed now, and I know this is, maybe it's a good segue into talking about Fed now, But if FedNow is a backdoor to a CBDC, which it is, right? I mean, CBDC has become an evil word, so they can't use that. So they bring up FedNow, and which will then eventually flip into a CBDC down the line when no one realizes it. But essentially, that's eventually getting rid of paper money. Paper money will probably in the next 10 years no longer exist. Most of us honestly just use credit cards now anyways. But the nice thing about paper money is that it's not tracked. If you want to go spend it somewhere and you don't want the government to know, you can go do that. With FedNow, you can't. And going back to gold, does physical gold and silver become the only physical way to pay for things that can't necessarily be tracked? There's a lot of crypto people that be like, oh, we'll just use crypto. No, crypto is more easily tracked. I mean, you can literally track crypto more than anything. So you can't say crypto solves that problem at all. You have to go to something physical. And physical, again, is something that the government's trying to get rid of. And then, like you said, a lot of people will say, oh, well, if you're not doing anything illegal and the government already sees.
Yes.
And it's like, well, it's not illegal now. But like I think I brought this up in the spaces is that, well, you know, what if all of a sudden one political party gains so much control that just donating to the other party, you get blacklisted, right? Or you get audited, or you get whatever. I mean, there are things that can occur that are 10 times worse. I mean, look at China. Look at some of these other countries out there and how much control the state has over what they do because everything is tracked. And so again, something that you may think is innocent today and no big deal, tomorrow, 10 years from now, that could be a no-no, and that's the issue.
Also, over the weekend, how convenient, Gareth, Google updated its privacy policy, saying that the company now reserves the right to scrape just about everything you post online to build its AI tools. So, they're scraping everything online, you know, okay, we get it. Like Alexa's already listening, but does this move surprise you? Or what does this tell you about just the general direction we're moving in as a society here, Gareth?
Yeah, I mean, we are moving to a more and more scary point in society. And by the way, AI is going to be a great help for a lot of us. It is also going to increase unemployment exponentially, right? So there is going to be downfalls. And also, by the way, as technology advances, it separates the rich and the poor more and more. So it will likely create more strife and more kind of discord in the United States and in the world as well. So again, there's positives and negatives. Yes, productivity is going to go through the roof probably, but there will be downsides to AI as well. So it's a scary future. You know, I think that we need trustworthy people guiding this, and that's the hardest thing to always find, is that I feel like when people gain too much power, it's very corrupting, and that's my concern about it. You need a wide variety of people kind of monitoring.
Gareth, I appreciate you taking time from your vacation to join us. Could you just give us maybe a little nugget? Is there any chart that you think is really interesting that you think could be a buy now?
Oh my goodness.
You weren't prepared for this.
No, I wasn't, but I do have some stuff here, all right? So,
yay!
So take a look at this. Now, you guys know I'm generally bearish on the markets right now. I think we've had this incredible run. But if we look at something like a 3M, which is a defensive name, look at this retrace right here, right down to this level right here, this area here. It's down off of its highs. I don't like buying stocks when they've gone up 3x or 5x or even 50%. I like buying things on sale. It's the same mentality as when I go to the supermarket, right? Well, this on 3M, you know, it's a solid company. It makes money, and it's back to levels not seen since 2007 and 2011. I think as risk goes, this is relatively low risk with decent upside if the markets turn down.